The underlying economy here in the United States is really cooking. I mean, we're hitting on all 8 cylinders, and to some extent, these trade issues are kind of shooting ourselves in the economic foot. And, you know, that's kind of been my story for a long time now, is I don't understand the need for these issues to disrupt what's actually a very healthy economy. So, yeah, and what you'll see is on days when trade goes to the back burner, the stock market goes up. On days where trade comes to the front burner and it looks terrible, the market goes down. So I think your question nailed it, Melissa, that the underlying economy is very good, but trade can easily derail, the confidence.
Well, it sounds like the market could be a gift right now, Brian. I mean, if you're really a believer that the economy is cooking and it's sort of these trade unknowns that are a concern, then, buying here in the longer term could be a great gift. At the same time, you have to also believe that there's going to be progress in trade, that this is not going to be, I hate to say, multi-year issue, because it really could be at this point.
Yes, it really could be. But I think that right now, investors, you really have to look at this as, is this a gift or is this going to be a lump of coal? And a lot of it does hinge on your outlook for what's going to happen with trade negotiations and what's going to happen with the Fed. As far as the trade negotiations, as Richard was saying, you can see the relief in the markets as you get a positive trade headline, and the angst in the markets when you get a negative trade headline. Similarly with the Fed, if it looks and sounds like the Fed might hike until it hurts, and if that might happen sooner rather than later, you get a down day with risk assets. Now, from our perspective, we think that when you're allocating capital over the long term, you can kind of look through this and think, well, it will likely work out over time, but what is that time frame? And that's where, in this type of environment, we think it's so important to remember the 2 cardinal rules of investing, which are diversification and patience. Sometimes these things just need to take time to play out, and we're hopeful and expecting that we will see some positive, some big trade deal announced by or before the November 30th G20 meeting, and that should be positive for the markets going into the end of the year.
You really expect that?
Well, what's the alternative expectation? You don't get an announcement like that, the market sells off, and then President Trump kind of backtracks on that and says that he's in close contact with negotiators, and then you get a rally. President Trump seems to be very sensitive. There might not be a Powell put, but perhaps there's a President Trump put in the markets right now.
Well, let me get your reaction, Rich, to what Brian just said about the possibility of a big trade deal getting announced before the end of November meeting, number one. Number two, I want to ask you a question about the American economy, and that is whether and when you see the U.S. economy slowing, and by how much?
Well, the first question, Tyler, when are we going to see a trade deal, and when? I will honestly answer, your guess is as good as mine. I don't think anybody really knows. I think there's too many moving parts here, and some of the issues you were discussing in the intro to this segment. So who knows? Your guess is as good as mine. In terms of the U.S. economy slowing, I think more importantly for investors, it's not is the economy slowing, will profits growth slow? And I think the answer to that is yes. Profits growth will slow in 2019, but not nearly as much as people are anticipating right now. You're hearing stories of peak earnings. Peak earnings implies that we'll see negative growth rates next year. I would say the probability of seeing negative growth rates next year is extraordinarily low. And so what that may set up is for some positive surprises as we go through the end of this year into early next year.